Well, stocks shook off a bad jobs report today, and they finished way above their early lows, only a 62-point drop, and that completes a pretty decent week with the Dow gaining 74 points. Investors are now looking ahead to the all-important earnings season, which is going to kick off Monday after the bell with economic bellwether Alcoa. So let's talk. We have Lee Munson, Chief Investment Officer at Portfolio, Jim LaCamp, Portfolio Manager at Macro Portfolio Advisors. You know, Lee, we've known for a couple years this is virtually a jobless recovery, but stocks have done extremely well. Will the stock rally continue?
I think it will. We have mediocre recovery. The big thing is jobs. I think when you look at the NASDAQ right now, that I think is pricey but could go higher, it shows that Wall Street has more confidence in companies spending money to increase productivity of the workers they currently have than the idea that we're going to increase earnings by hiring more people. And by the way, those last four guests, nobody really wants to talk about the issue. If they gave me as a small business owner 12-month amnesty on payroll tax for new workers, I would hire more people, I'd be more productive, I'd probably make more money. But for now, I think that we can recover. I think that we'll hit a new high between now and the end of the year. I think investors need to use this weakness to load up on quality.
All right.
Outside of that, no recovery in jobs.
I'm going to think about your amnesty proposal, only because it aimed at you. I got to think about that. But Jim LaCamp, let me bring you in. You know, in an odd way, I don't want to sound like a killjoy, Jim, but if you have very, very, very slow job creation and, frankly, low wages, that's good for corporate profits, which is good for the stock market. Now, that may not be a popular point of view, but isn't that right? And isn't, to some extent, that's what's going on here?
To a large extent, that's what's going on here, Larry, but also it's the globalization. If you look at where the earnings is coming from, those companies that export are still doing very, very well. And look, China may be coming off the boil on their growth, but they're still growing at 8% or so. That is a risk down the road. But for now, corporations are in a very good environment. They have low interest rates. They have very, very ready access to capital, high productivity, and globalization, which is really helping.
So you're not fearful. This is interesting. You're not fearful of today's jobs report, and you sound rather bullish, Jim.
Well, not so much. I mean, if you look at what the market's done, it bounced off the 200-day moving average. It passed its first technical test. But the rally's really been on light volume. And, Larry, investors need to know that the third year of bull markets are notoriously volatile, and I think we're going to see that this year. We still have problems in Europe that aren't going away. In fact, they're getting worse, and I think they're underreported. Secondly, we have a slowdown that's probably coming in the economy in the second half that will weigh on stock earnings, even though earnings are still going to be good.
A slowdown in earnings, you're talking about. A slowdown in earnings.
A slowdown in the economy and in earnings.
Right. Lee Munson.
And so I think there's a readjustment of expectations that we're going to have to get, that the market's going to have to work through.
All right, Lee Munson, before we give you amnesty on all your taxes, I want to ask you where your favorite investment picks are.
You know, in the last week, I've just been horrible. I've been loving my grain position when the crop report came out. So I love the ag sector. I still think our exports in corn are great. But I think if you want to play it, if you want to be long and don't want to be a bear and don't want to hide, I think you look at stuff that pays some cash flow. I like master limited partnerships, energy infrastructure. I like commercial real estate because for what little people we have employed, you can look at REITs because you still have to put those people in some type of office. So get some dividends between now and the end of the year. I'm not a killjoy. Corporate America can hire people 30% less, and they can go out and buy a house at 50% from the peak.
You know, that's also true.
I wouldn't say it's kill. You know, it's positive.
To some extent, I want to take back my earlier statement because we saw in the 80s and the 90s that you can have very strong job creation and strong profits and a strong stock market at the same time. So I want to say it's not a zero-sum game between jobs and profits. It's actually win-win. But, gentlemen, we've got to get out tonight. Thanks very much, Lee Munson and Jim LaCamp.